Hey
Got
everyone, welcome to our next session for the SOFA Summit. Really excited to introduce one of our current clients, someone that we have been working with for many, many years now, and someone that actually lives down under, lives down in Australia. One of the many benefits of working with our team is you don't even have to live in the United States, let alone in Tennessee. And this individual, he has built a great portfolio of single families. We've been able to help move that portfolio into the multifamily apartment syndication space as well. And he's got a really incredible story and background. And it's always great to have Kirby come on down to come visit us in Memphis as well, all the way from Australia. So without further ado, Kirby, how are you doing today?
I'm very well, thanks, Mark. As you know, the time difference, it's early morning here where it's evening for you, but that's fine here, yeah.
Yeah, well, I appreciate you coming on here and hope you've had your cup of coffee. Feel free to keep sipping away. So without further ado, why don't we just dive in? Why don't you tell everyone just a little bit more about yourself and your story?
Well, probably I was like anybody else, but in my youth, I was very heavily involved in scouting right through until I was nearly 60, believe it or not. I went back as a leader. In high school, guidance counselors tried to talk me into studying engineering, but in the end, I decided I didn't want to do engineering. I was more interested in accounting. So I studied accounting. But probably as a child, I always wanted to own my own house. It was my dream to own my house when I got married, and I got engaged at 23 and started looking to buy a house. Signed a contract after about 3 months looking and closed it just after my 24th birthday. And I can remember clearly when we bought the first house, we paid 47,500 for it, and there was another house we liked that was better, but it was $49,000. But that extra $1,500, we couldn't stretch that far to get the house we would have preferred. The house, when we bought it, we rented it for 8 months until we were married. And one of my standard jokes is I say I lived at home with my parents until 3 weeks after I was married, because the first night we returned from our honeymoon, we stayed at my parents' house. The tenants were building their own house and they kept getting delayed before they moved out. So they only moved out the day before we returned from our honeymoon. And the following morning, which was a Saturday, all my mates turned up at my parents' house, loaded everything into their cars and moved us into the new home. We arranged for the refrigerator, furniture, some furniture we bought to be delivered in the morning. And while we were moving the heavy things, the girls were actually cleaning the glasses and getting all the cutlery and crockery put away. So basically, in half a day, we moved lock, stock, and barrel in. As I said, I always wanted to have a house when I got married, and I think I was successful in that regard. I think I'm probably a strange person in that I didn't own a car until I was 28, by which time I had the house paid off. So it was really my objective to own the house rather than a car at that time. I've worked as an accountant my whole life, and I've just retired, as I think you know. I've looked after my investments in Australia and the US. I started my accounting career working for one of the large accounting firms. And in 1982, I joined my father in a suburban practice in Brisbane, and I purchased it off him on his retirement in 1995 now. I managed to build a practice from a 3-person firm to having a staff of 15. Expanded the range of services we offer our clients. I've worked in the practice, looked after 1,400 odd clients until I sold the business to 2 of my employees just on 4 years ago now. My wife worked in the business with me from 1997 till her retirement 5 years ago. Through hard work in my business and making what I consider good, solid investment decisions, my wife and I have been able to build up a pretty good business and look after our 3 children, put them through private school, accumulate assets, and really enjoy ourselves, and starting to look forward to trying to travel the world, hopefully, particularly now that COVID is slowing down, I hope, anyway. So, yeah.
Yeah, I mean, you've had an incredible career there, and it's always good to see you in person and have you come on down to Tennessee. So I always hope you can do some more traveling, and we look forward to coming down and visiting you once this is all over for good. And so I would love to come on down to Australia. So having your own accounting firm, obviously, you're incredible, with numbers here. So why did you decide to invest in real estate as opposed to other investment classes?
Well, probably initially I wanted to own my own home, and that was probably not the investment. But my wife and I both worked hard after we bought the property, put all our money into paying off the debt. By the time I was 29, we owned the house debt-free, and we began to spend our money, I'd say, a little bit unwisely on things that we really didn't need, but because we had the money, we tended to spend it. We basically made the decision that we'd go back into debt and give us an incentive to pay off another debt to grow our personal wealth into the future. So we bought a second house, which was always a rental. We borrowed 100% for that house, but used our existing house as the security for that. And then again, we refocused ourselves into paying off that house as quick as possible. When I was about 34, we sold the investment house, bought 2.5 acres of land on top of a hill with beautiful 100-degree views. 360-degree views everywhere. We did bridging finance to build a new home on it. And then we sold our first home to pay for that house. And we made substantial capital gains on both the two houses that we had owned to buy our own house. From then on, we just bought and sold properties as it took us. We had both, our houses were always mortgaged, so we could draw down on them as we needed to. But we've always thought real estate's a solid investment in Australia and want to invest wisely, make good income return and capital gains. When we eventually sold the property, we always purchased property in good areas where it was pretty confident there would be future capital gains, and invested. We did invest a bit in the stock market. We didn't want all our eggs in the one basket, but property has certainly been the best return for us over the time. Housing in Australia became and is still relatively expensive. For example, we purchased a 4-bedroom apartment around 2010. It cost $450,000. We just sold that for $850,000. So, that's sort of some idea of what the growth. This is in Australia, of course. My daughter last year bought a 4-bedroom house, and it cost her $1.5 million. And that's not a spectacular house. It's a nice house, but very average, if I can put it that way. To some extent, it's probably a bit like living in New York, or California, or Florida, I suppose, too. Yeah.
Right. Yeah. The overall housing market has definitely exploded, and is significantly higher in other countries as well. Right. Just like Australia, you look at many other countries and just their average, you look at the average income and then you look at the average home price, and it's a lot more favorable here in the United States. So we're pretty lucky. But with all that said, what made you decide to invest in the Memphis market as opposed to other markets, either in the US or around the world?
Well, really, after the global financial crisis, the exchange rate between the Australian dollar and US dollar was, it actually got down. We were getting $1.11 US to $1 Australian, but let's say it was about parity. And now it's down to 68 cents US to the Australian dollar. And so we wanted to travel in our retirement, and that was before COVID, of course. And we wanted to have money in US currency because US dollar is always a hard currency, no matter where you are in the world. So we wanted to make sure we had money in US dollars, so then the exchange rate to the Australian dollar really wouldn't affect us. We spent a year, probably from 2010, 2011, trying to find something that was worthwhile investing in America. We attended a number of seminars in Australia, and there are a lot of people that were spruiking spectacular returns and everything, but to me they were just salesmen. They weren't serious, down-to-earth entrepreneurs. In August 2011, Jim Reedy actually was out in Australia, and we met him, and I'll have to say I was impressed with his down-to-earth manner. He was probably he wasn't a spruiker. He was not particularly comfortable talking in front of the big group of people, and so we got on well with him, and we purchased our first two houses through Reedy & Company. I remember the first two we paid $73,000 and $70,000 for the first two. The next year we actually came over to USA. We went to Kansas City, Memphis, Atlanta, Jacksonville, and a couple of other cities. I can't remember them all. While we didn't buy anything in Kansas City, we purchased a couple more properties in Memphis, Atlanta, and Jacksonville in Florida. When you're as far away from the properties as we are in Australia, you need good management to see that the properties are looked after and maintained properly. And we were happy with Reedy & Company. We've since sold both properties at Atlanta, and one of the ones in Jacksonville. We've got the second one on the market at the moment. The third property we have in Jacksonville we'll probably be selling next year, basically to spread the the tax liability over a number of years, so we don't get all the tax in 1 year. And we're moving that money more back into the Memphis area because we're happy with the management that we've sort of experienced over the last 10 years. When we purchased the Memphis market, we did so without, we didn't have expectation of huge capital gains. Our research on the market said it was a large rental market and that we expected to get ongoing good returns on our money without making big capital gains and or potentially capital losses. The capital returns we received in Memphis were consistently higher than what we're receiving in Atlanta and Jacksonville, and in Australia as well. So that's why we've sort of been concentrating on the Memphis area.
Yeah, that's really great to hear. And you hit the nail on the head about the Memphis market. We are that hybrid market where, cash flow and appreciation, they go hand in hand. It's not one or the other. And it's always nice to be able to diversify for that exact reason. So, we've been, partnered together here since 2011. So I guess, during over a decade now, how's your experience been with Reedy and MIP?
Oh, it's always been good, Mark. As I said earlier, we attended a number of seminars in Brisbane and we were looking to invest in the US. And until we met Jim, my wife and I had considered most of the other sharks. So when we met Jim, he impressed us with a down-to-earth manner. He wasn't big on spruiking himself. 11 years on, that impression hasn't changed. And I think we have a good, friendly business relationship. We've come over to Memphis, I think, probably now 4 times over the last 11 years. We always have time and catch up with Jim and have meetings at your offices and everything like that. I won't say we always agree. And even my wife and I don't agree all the time, let's face it. But we've always had the maturity to sit down, discuss the matter and come to a suitable compromise. And it's always been very satisfactory. He's introduced us to his family, yourself, Sean, and while our relationship is still young, I'm happy the meetings have had. Relationship we've been building, been good. Jim is happy to share his expertise and knowledge with us and the market and what's going on. And I've always found his honest and his recommendations very good and secure.
Well, that means the world. And that's at the end of the day, long-term relationships are just extremely important. And, finding a trusted partner to where you can, be advised by that individual based on what we recommend, right? What we see. And so do you have any advice for a new investor out there listening today?
Well, I think probably 2 points. The most important point is finding a property manager that manages the property best, particularly for us when we're so far removed. If you're not there to inspect the property, manage it yourself and go and look at problems as they happen, you've got to have a good manager to look after the property in your absence. And I personally think Reedy's and Memphis Properties do a good job, and the people they employ look after the place for us and keep us informed, okay, by email, but they do keep us informed with what's going on. The second point is you've got to invest for the long term. I'm not a good gambler. I'm a lousy gambler, in fact. So I look for good, steady returns in the long term rather than a quick 100% flash on your money in 2 years or something along those lines. So, as I said, I've been in the market there 11 years, still happy. I'm still investing as projects come along that suit me. And probably a third one, which I said there was only 2, but anyway, I always like to work and pay off debt. So rather than, I'm not a big lover of interest-only loans. My wife and I have always we go into debt, fine, I've got nothing against debt, but we then have a focus to try and get the debt paid off. And as we get it paid off, we'll buy something else and go back into debt. But I'm not a big lover of interest-only loans. I know sometimes you guys do more in interest-only, but that's not my preferred option anyway. So, yeah.
Yeah, well, good to hear. So tell us a little bit more about your real estate portfolio, over the years. How many doors, what was the most amount of doors that you've had under the portfolio from a single family home perspective?
In the States alone, I had up to 18 doors. I've sold off now, I'm down to 9. With 2 on the market at the moment, which will drop me back down to 7. But as you know, I've been investing in some of these projects with multi-door projects or things. So it's a bit hard to know exactly how many doors I've got in there, so because when we buy a 10% interest in one or something along those lines, you count a 53 door apartment block, and that's like probably that's 5.3 doors or something like that. So, but as we've been selling the single house, we've been moving them into the multi-door or multi-unit apartments or complexes, whatever you'd like to call them.
Yeah, yeah, and that's what I love about you said it in the beginning, one, you got to get started, but two, you have to look for the long term and have a lot of time in the market. And you've been fortunate enough that, getting started over a decade ago, you're able to acquire the single family homes. And as you grow the single family homes and, let the tenants, help pay off, whatever debt you have on the properties, and just grow your equity to get the capital gains, grow the cash flow, you can then sell those properties. And this is what we've been doing. It's what we're doing right now, is then taking those profits and moving them into even larger investments like the apartment syndications. And it's been, you've been an incredible partner on all the syndications that we've had as well. And, really appreciate that relationship. But it's just exciting to see that as you get started, where you can end up in over a decade, which really at the end of the day, it's not a lot of time within investing horizon. So, Kirby, really appreciate you and the relationship very much. Thanks for sharing your story and your experience here with us. And we just look forward to a lifelong relationship. And so that's it here for this session with Kirby. I hope you guys enjoyed it, and we're off to the next. See you guys soon.
Thanks, Mark. Take care. Pass on the best to the families.
Will do. Thanks, Kirby.
See ya.